All right, welcome back. We got our stock market update. It's been a few weeks and there's been a lot of news, so we'll kind of wrap it all up here pretty quick. But year-end trading, you got a lot of window dressing, you got a lot of people taking profits and just positioning their portfolios for 2026. And some of the big movers we have here, you've got the semiconductors. Basically any of the hardware names are taking a hit on some of the AI data center, I guess you could say, weak sentiment for the AI data centers, as we have some names like Oracle potentially not producing their data centers as fast as they once announced. So some of the AI bubble is being deflated a little bit, and we're seeing that in the semiconductor names. So you got NVDA down 8%, AMD down almost 20%, Broadcom down 5%, Oracle down 18%, Microsoft down 6%. So definitely some of those AI names, AI trades giving back some profits. Meta having a little bit of a bounce here. Google still staying strong. Apple holding up real well. And then you've got some of the retail names down. Amazon, Costco, those are looking a little weak. We'll look at Costco chart because they had earnings last week. And the big winner on the monthly chart here is going to be Tesla. Hit all-time high yesterday, giving back some of those gains today, but up 17% in the last month or so. As far as the ETFs, pretty flat here. We did breach all-time high on some of the names last week, and we're giving, I think, 4 days in a row in the red, but we did breach all-time high last week. Commodities looking really good. Gold ripping, silver ripping. So that is very strong performance for some of those commodities besides oil. Oil looks terrible, which is good for gas prices. Crypto is getting crushed, but it's super volatile. Today I saw it bounce up and then shoot right back down. So we've kind of just been in this kangaroo market for the crypto names. We're not really going anywhere. So we're just bouncing up and down here. All right, let's take a look at some of the individual charts. Volatility kind of popping back up here. We had a 7% day today, but we'll see where we go from here. We haven't had a big spike since November. But it looks like we could be gearing up for some more volatility to start off 2026. Indexes, let's look at the S&P 500. Again, we almost got to the all-time high last week, but we've got 1, 2, 3, 4 red days in a row, and we are down a few percent from our recent high here and our all-time high on the S&P, which is around 690 for the SPY. The NASDAQ 100 QQQ, similar looking story. We didn't get quite up to our all-time high last week, but we had a nice bounce, and now we're looking like we're rolling over a little bit here, but still in a long-term uptrend. And the NASDAQ in particular is still up 50% from the tariff low, so still a very strong performance this year. And then let's take a look at the interest rates, because we did get a Federal Reserve cut last week, so they cut interest rates by 25 basis points. But some of the more interesting news that came out of the Federal Reserve meeting, I'll put it up here on the screen. They did end their quantitative tightening. So they are no longer going to be selling assets. And they went ahead and turned around and are now going to start buying assets. So they ended quantitative tightening, and they are now going to be buying $40 billion per month of bonds. And they're not calling this quantitative easing, they're calling it reserve management. So a rebrand of quantitative easing. So pretty interesting. But yeah, you can see here they said in the meeting, this is not quantitative easing, we're going to call it reserve management. So they're doing that to help stabilize markets and provide some liquidity. They mentioned that around tax time, they need to have ample liquidity. So we'll see what that means. But it's a big deal when it comes to the Fed stance. This is a very dovish pivot for the Federal Reserve, and in May we're going to get a new Federal Reserve. So I think we're going to continue to see some more some more dovish speak and actions out of the Federal Reserve. So that is good for interest rates, but the bond market, as you can see here, just holding up steady. The 10-year yield around 4.1, so we haven't really gone anywhere in the last couple of weeks. So we'll see where we go next from there. Let's take a look at, we'll take a quick peek at gold, but we are almost at all-time highs again on gold. So nice move, nice recovery there. Silver also breaking out Silver is at 66 bucks. Pretty crazy looking chart here. We looked at volatility. Let's take a look at oil on its recent relative lows here. So we keep hitting this 54 level. So it looks like eventually we'll break that and maybe get down into the 40s, which is good news for inflation. Some of the individual names, let's take a look. Amazon. So Amazon gave up all of its gains post earnings. So we had that huge pump on their earnings report, and we've given all that back. So we're back down to 220. I know Amazon is in talks to have a partnership with OpenAI. That was announced today. A couple months ago, if you had a partnership with OpenAI, your stock was automatically up 10%. That is no longer the case. Again, you can see the AI sentiment is not holding up like it was a few weeks ago to me, which is very, very healthy. I love seeing that. I love seeing some of the weakness in some of these names. It's going to provide us some nice opportunities going into next year. Another name that I'm really interested in here is Uber. Uber is falling off a cliff from its all-time high of 102 down to 80 bucks per share. This is on some of the Waymo news, some of the Tesla full self-driving news. So market is saying it's worried about Uber's moat when it comes to autonomous vehicles. So we will have to wait and see what happens as more autonomous vehicles roll out. Google holding up here at around the $300 level. Makes sense for some profit takers to step in here. We've had a phenomenal move here on Google. And let's take a look at NVDA here. So we're at a pivotal point here for NVIDIA. Down from its all-time high of 212, we're down to 170. And if we break below this 165, it wouldn't surprise me if we quickly get down into the 150 level for NVIDIA, and then wait and see what happens there. But again, NVIDIA is cheaper today than when ChatGPT launched back in 2022, I believe, way back here. So its earnings has just grown at such a staggering rate. But this chart does not look too good. This looks like a classic head and shoulders, and we could be heading down into the 150 levels if we keep this negative sentiment on AI. Tesla, again, we breached the all-time high yesterday. Let's clean this chart up a little bit. Breached all-time high of 495 yesterday, and we had a big red candle today. Makes sense, profit taker stepping in. We did hit this 490 level in 2020, what is this, 2024? So people who maybe bought the top finally can get out of their shares for a little bit of a profit. But a really nice bounce that Tesla had here from the 380 level straight up to 480. So nice strong performance there. Some names to look at. Let's take a look at Meta real quick. We did get some nice news a couple weeks ago on Meta that they're cutting their metaverse spend. So we got a nice pop on that, but we gave back all those gains and we're chilling at 650 right where we announced that news originally. So wait and see here. Again, the market, I think Meta is in a penalty box until they can provide some more cost-cutting measures and people can see that they're not just talking the talk, they're walking the walk. So we'll wait and see on Meta. Netflix, a nice pullback from its all-time high of 134 down to the 95 level. To me, this is very interesting level to potentially start a position in Netflix. There's going to be a lot of regulatory headlines, a lot of acquisition news with the Discovery, Warner Bros, HBO deal that Netflix potentially can acquire those companies, or someone else will swoop in and snag it away from them. So we'll have to wait and see. The problem with Netflix buying it right now, in my opinion, is that deal is not going to get resolved anytime soon. So that's going to be an overhang for the stock. Eventually, when it gets resolved, I think Netflix will make a big move to the upside. It's just going to take a long time for that to get resolved, and there's going to be a lot of choppiness as we get new deals, new offers come to the table from other competitors. So I don't expect Netflix to go anywhere anytime soon, but when that does get resolved, I think that'll be a positive catalyst for Netflix. Broadcom, so this is a phenomenal semiconductor company. They reported earnings last week, but the market did not like the earnings. So this company is similar to Oracle, where it had a huge pop 2 earnings reports ago, but we've given all that back. So we're filling the gap from our previous earnings report where there was a ton of AI hype. So again, you can just see the fizzle of AI is starting to, it's fizzling out here. So you can report great numbers just like Broadcom did, but people are they're not as excited about the whole AI hardware trade, data center trade. As we're starting to see some of those crazy deals that were announced, people are seeing the fundamentals of it and some of the cracks in some of those deals, and so they're not buying in all the hype. But long term, there's still a ton of phenomenal businesses, but we just got a little overheated in September is kind of my view on things. So speaking of Oracle, ugly looking chart here. So we had this huge 40% pump after earnings, and we've given all of that back, round tripped. So we went from 345 down to 170. This company has a lot of debt. They do have a lot of cash flow, but they're going to have to get a little creative on how they're going to pay all their bills because they have a lot of debt to pay. So pretty interesting stuff going on here. This is the big headliner. Anytime there's some bad news with Oracle or people questioning their deals, the whole AI trade winds down with it. So it's not just Oracle. Oracle goes down, it pulls down NVDA and Broadcom and all the components that go into those data centers. So we'll see how that gets resolved. Let's take a look. Who else we want to look at? Costco. Where is Costco? Costco had earnings last week. I still need to listen to the call, but they did beat earnings, $67 billion. The problem I have with Costco is it's very expensive. Its price to earnings is much higher than a company like NVIDIA, and they just don't grow their revenue as fast as some of these technology companies. It's still a blue chip company. It's not going anywhere. It's a cash cow. But it does look vulnerable here for a potentially deeper pullback, and that's just going to be the market re-rating the stock. It's a phenomenal business. Everyone likes it. Everyone knows Costco. But what price do you want to pay? So especially as we get some better deals on some of these companies like an NVIDIA, like a Broadcom, people are going to want to pay a lower multiple for a company like Costco if they can scoop up a company like NVIDIA at a cheaper valuation. That's going to be about it for this market update. We do have CPI numbers tomorrow, and after that, I don't think there's a whole lot of news going into the end of the year. So I will probably do a year-end video for you guys, and then we will get ready for 2026. So I hope everyone is having a great end of the year, and we will talk soon. All right, peace out.